China will not invade Taiwan. The global economic fallout, the tension between China and Taiwan has persisted for decades, but what if China were to invade Taiwan by force? While a full-scale military conflict seems unlikely, the global economic consequences could be staggering. China's economy thrives on exports, making it deeply integrated with the rest of the world. If China invades Taiwan, international sanctions and embargoes would likely follow, cutting China off from key markets. This would cripple industries reliant on Chinese manufacturing, from tech to consumer goods, causing global disruptions. A major concern would be Taiwan's semiconductor industry, which supplies around 60% of the world's microchips. If China gained control, it would dominate a critical piece of the tech supply chain. This could lead to a tech Cold War as countries like the US race to build their own semiconductor capacity, but in the short term, chip shortages would hit everything from smartphones to cars. China isn't Russia, and its reliance on trade makes it more vulnerable to economic retaliation. Companies with deep ties to Chinese supply chains like Apple and Tesla would face tough decisions. Shifting production to other countries would be costly and time-consuming, driving up prices for consumers. In the long run, an invasion could trigger a global shift away from reliance on Chinese manufacturing. Countries may prioritize domestic production, but this shift would likely lead to higher costs and inflation. Global businesses and economies would face a difficult adjustment period. Ultimately, while a Chinese invasion of Taiwan seems improbable due to the economic risks, the consequences would be felt worldwide, disrupting industries and reshaping trade. The world economy has too much at stake to ignore this potential conflict. Subscribe to Think Talk channel.